There will come a day when you no longer work a job to earn money. Maybe it'll be voluntary and we'll call it retirement. Or maybe it won't be your choice at all. And whether it's by choice or not, there are definite mistakes that we can be making right now in our 50s that will shape how that chapter of our life unfolds. When that day comes, will you look back on your 50s and wish you had done things differently? Today I'm giving you 10 money mistakes that we absolutely cannot make in our 50s. And one bonus mistake at the end, one that many of us haven't thought about. So let's go. So let's get the biggest mistake out of the way, right? Number 1, not paying your future self first. To be honest, I couldn't even clearly see my future self until I hit my 50s. But once I started getting glimpses of her, I got a little worried. I realized if I didn't seriously start putting some money toward the me I wanted to be in retirement, I was going to end up with one that had very few options or 0 options. So I flipped my spending upside down, literally. Instead of just spending it all and having nothing left at the end of the month, I started setting up automatic contributions. I upped the contributions, at my place of employment into my 401k. I opened a Roth IRA externally, and an HSA, and started putting money in that automatically. I started looking at all my expenses, mining them for any little nuggets that I could find. I actually got a little bit addicted, to the thrill of finding extra money to put in those accounts. I entered my 50s with debt, and I did my best to whittle that away, and now I have spent the rest of my 50s avoiding debt at all costs because I want everything extra to go into those accounts. And just in a few years' time, now I can actually picture a retirement with more options. Sailing the Caribbean on my yacht might not be one of them, but that's okay. So don't go another day without paying your future self first, especially when you're in your 50s. You've heard this your entire life, so you might as well put it into practice now. No one will be more grateful than you 20 years from now. Okay, the number 2 mistake you could be making in your 50s is not reviewing your insurance needs. Insurance, not exactly a topic I like talking about. Talk about boring. But it's a necessary evil that we can do nothing about. In our 20s, we can get by with being underinsured. But that's not true in our 50s. Because once you've started building assets, a home, a car, a retirement account balance, now you've got something to lose. And you've got to protect all of that with proper liability coverage. And the same goes for health insurance. Even if you're feeling great, this is the decade where screenings really matter. Screenings for cancer, heart disease, blood work numbers. Whether you're being proactive or you're actively dealing with health issues. You need proper coverage to avoid medical bills from spiraling out of control. And also when it comes to insurance, don't let your loyalty be taken advantage of. When it comes to home and auto insurance especially, sticking with the same company for years and years, it can actually lead to higher premiums. Shop around because in this case, loyalty can absolutely work against you. Okay, the 3rd mistake is still supporting your adult kids when you're not secure. If you're in your 50s and you're in debt or you're behind on your retirement, you absolutely cannot afford to co-sign, fund college, or carry your adult kids financially. Even if you're in good financial shape, I say don't co-sign for anyone. Not a car, not a loan, not a lease. And also don't take out any federal student loans to pay for your kids' college education. I've said it before, kids can get loans for their education, but we can't get loans for retirement. Make absolutely sure that you've checked all the boxes for your own future before you start writing checks for theirs. The fourth money mistake that you could be making is only contributing to tax-deferred retirement accounts. If you've been contributing for years to your 401k, that's great. It really is, except for one thing. If all of your retirement savings is encompassed into tax-deferred 401ks or traditional IRAs, in retirement, you're going to face some big tax bills. Some probable IRMAA surcharges on Medicare and some painful required minimum distributions later. In retirement, we need tax diversification. But once we've retired, it's too late to do anything about it then. In our 50s right now, there are things we can do. Start funneling some of your contributions to a Roth IRA today. Even if you have to take some of the contribution you're putting into your 401k, reduce that a little bit in order to put some in your Roth. Having a 401k and a Roth to draw from in your retirement is exactly the flexibility that you're going to want. If your place of employment offers a Roth 401k option, I wish mine did, definitely, you could do that as well. And don't forget an HSA account if you're eligible, because that's the only product out there that has triple tax advantages to it. Now, if you would like to dig a little deeper and get some more information on the differences between all of these things I'm bringing up, the Roth 401k, the Roth IRA, the traditional IRA, the HSA, I'm going to put some links in the description box below. Your 50s are going to be the last decade that you have to ease some of the tax burdens you're going to face in the coming decades. The fifth money mistake is procrastinating your home maintenance. If you've got repairs or updates or remodeling projects on your list, your 50s are the best time to tackle those, while you still have steady income and the energy to deal with the hassle of it. And also take a look at your home with future self in mind. Will it still work for you at 75 or 80? Is it going to be manageable physically, financially? Or are there changes that you can make now to make it more age-friendly? A lot of people think they'll just downsize in retirement, and for years that's been a pretty viable option. But with the housing market and the way it's been lately, that's not going to be as affordable as it once was. The bottom line is the longer you put off these house issues, the harder and the more expensive they're going to become. Okay, the sixth mistake we can be making in our 50s is letting one spouse handle everything financially. I don't have to tell you how dangerous this one can be. You know that already. A lot of couples fall into this routine. And you may be thinking, well, we've gotten by with it all these years. Why worry about it now? But why tempt fate? If something unexpected happens, illness, divorce, death, if you're the one left in the dark, that convenience can turn into a crisis real fast. And your 50s are the perfect time as well to review your will and to check all of those beneficiaries that you've named on all those accounts. Probably some of them you named the beneficiary decades ago. So just make sure that they're still current. Because do you really want your ex-spouse that's listed on all your accounts to get everything? I don't know, maybe you do. But just know where you stand. Make sure that both of you know where the money is, how everything works, and what would happen if one of you had to suddenly take over. And number 7 on the list is ignoring your health. Because health is wealth, man. It's the most expensive and valuable asset that you have. I've seen people make incredible positive changes in their 50s. Diet movement, strength, energy, it's still absolutely possible to make a comeback. But you've got to start now. This is the decade to build better habits. More walks, more stretching, more real food, more sleep. Don't let another decade go by ignoring your body. It becomes a lot less forgiving as we get older. And because your health is the foundation of everything. Everything that we're talking about in this video revolves around your health. And number 8 on the list is not maintaining an emergency fund in your 50s. You know, every year that you go without an emergency fund is another opportunity for an unexpected crisis to set you back financially. It could be dental work. It could be car repairs. My 50s has had both of these. And without a cash cushion, your options are very limited. You either go into debt for it, you take the money out of your retirement accounts, or you go without fixing your teeth or your car. I want you to set up some systems so that you can avoid taking on extra debt like this in your 50s. And I definitely don't want you to think that taking money out of your retirement accounts is the only option. And what is the fix? Well, it doesn't have to be huge. Just start setting a little aside every paycheck. Any unexpected money, you know, a tax refund, rebates, birthday cash. I don't care if it's just $5. Send it straight to your emergency fund. And the 9th mistake you could be making in your 50s is not having a 5-year debt repayment plan. So let's talk about the debt you do have. You know, the credit card debt, the medical debt, the car loan. It's okay. It's not the end of the world to have debt. You know, I had plenty of it when I turned 50. You know, there's a way out of it, even though you may not see it right now. You know, start by adding up every debt that you have outside of your mortgage. Then create a plan to get those balances to zero within the next 5 years. Now, if you can pay it off faster than that, then that's great. But 5 years is your absolute max. You know, take that total that you added up, divide it by 60 months. That's your new minimum monthly target. And once you've knocked out all that consumer debt, if you want to take a look at your mortgage and start attacking that next, then go for it. But here's the mindset shift. You know, going through your 50s without a 5-year debt repayment plan, that's no longer acceptable because you can't fully focus on your future while you're still paying for the past. And number 10, putting all your net worth into your home. Your house isn't a retirement plan unless you plan to sell it and not replace it by buying another one. You know, a home can be a valuable part of your net worth, yes, but you can't eat it and you can't just sell off little pieces of it to get by. You either live in it or sell it. There's not a whole lot of in between. You know, and counting on things like reverse mortgages or home equity lines or a strong housing market 20 years from now, that's a risky strategy. So if your house has been the retirement plan up to this point, it's time to start looking outside those 4 walls a little bit and use your 50s to start building a retirement fund that can cover everything that Social Security won't. And here's the last mistake that I want to cover, the bonus one, and that's being in the dark about your parents' financial condition. You need to know. I mean, do they have a financial plan? Or will they allow you to step in, if needed, to manage their finances? Will assisted living or a nursing home be an option for them financially if it comes up? You know, and for some of us, this may not be an easy task. If your parents are unwilling to talk about it or share their financial details, there's not a whole lot you can do about that. You know, this is where family dynamics can get really messy. You know, with my mom, it took kind of years of wearing those defenses down on her a little bit and feeling comfortable enough to share her financial situation with me. So that's why I say start now in your 50s. Because like me, it might take you a while. And it's understandable. They've been financially independent all these years. It can be hard to give up some of that independence. Just do what you can on your end to reduce the risk of any surprises. And also, please, just keep a watchful eye on them as they age regarding their finances, just in case that there may be some memory issues or people in their life that could be trying to take advantage of them. Our 50s, they can be a power decade. But let's be honest, life still happens. Mistakes, setbacks, surprises, they're all part of the deal. This list isn't about being perfect. It's about avoiding the pitfalls that can quietly derail our future. Because whether you're ready or not, there will come a day when you no longer work. Just being aware of what to watch out for, that's a huge step in the right direction. Growth, learning, reinvention, those things don't stop in our 50s. In fact, those things probably mean more to us now than ever. If this helps you, then please hit the like button. It pushes the video out to more Gen Xers. And share in the comments which of these mistakes matters the most to you. And if you want more ideas on how to thrive in this decade, then watch this video I've linked right here. I hope you have a great week. Nanu nanu. I'll see you in the next one. Bye.